Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. This is part 2 of how your wallet is impacted by the Consumer Price Index. Inflation and CPI trends. Understanding the relationship between inflation and the Consumer Price Index, CPI, is essential for managing your finances effectively. Inflation, the rate at which the general level of prices for goods and services rises, directly impacts the purchasing power of your money. The CPI, on the other hand, measures the average change over time in the prices paid by urban consumers for a market basket of consumer goods and services. Inflation and CPI relationship. Inflation and the CPI are closely intertwined, as the CPI is a key indicator used to track inflation. When prices for goods and services in the CPI basket increase, the overall CPI value goes up, signaling inflation. This inflation erodes the real value of money, reducing what each dollar can buy over time. By monitoring CPI trends, individuals can gauge how inflation is affecting their cost of living and adjust their financial strategies accordingly. Historical CPI trends. Examining historical CPI trends provides valuable insights into how prices have fluctuated over time. By analyzing past data, economists and policymakers can identify patterns and predict future inflation trends. Studying historical CPI trends can also help individuals understand how price changes have affected their purchasing power and standard of living over different periods. Keeping track of historical CPI trends can assist in making informed financial decisions and planning for potential inflationary periods. Government policies and CPI. Government policies play a crucial role in influencing the Consumer Price Index, CPI, which directly impacts the financial landscape individuals navigate daily. By implementing various fiscal and monetary measures, governments can affect the overall pricing dynamics of goods and services within an economy, thereby influencing the CPI values that consumers encounter. Role of government in influencing CPI. The government wields significant power in shaping the CPI through its policies and regulations. By adjusting taxes, subsidies, and tariffs, the government can impact the costs of production and distribution for businesses, which ultimately trickles down to affect consumer prices. Additionally, labor laws, trade agreements, and market interventions all contribute to the government's ability to influence the CPI. Fiscal and monetary policies. Fiscal policies, such as government spending and taxation, are potent tools for controlling inflation and, by extension, the CPI. By increasing or decreasing government spending or adjusting tax rates, policymakers aim to regulate the overall demand in the economy, thereby affecting price levels. On the other hand, monetary policies, managed by central banks, involve manipulating interest rates and money supply to regulate inflation levels and stabilize the CPI. In summary, government policies have a direct impact on the CPI by influencing the economic conditions that determine price levels. By enacting strategic fiscal and monetary measures, governments can steer the economy towards stability and manage the fluctuations in consumer prices that individuals encounter in their daily lives. Tips for managing finances with CPI fluctuations. Adjusting your financial strategies in response to Consumer Price Index, CPI, fluctuations can help you stay ahead of inflation. Here are some practical tips to manage your finances effectively during times of CPI changes. Budgeting strategies. When CPI rises, your budget can take a hit due to increased prices of goods and services. To mitigate the impact, consider these budgeting strategies. Track your expenses. Keep a record of your spending to identify areas where you can cut back during inflationary periods. Create a contingency fund. Set aside a portion of your income in a separate account to cover unforeseen expenses resulting from CPI fluctuations. Prioritize essential spending. Focus on essential expenses such as housing, utilities, and groceries, and reduce discretionary spending on non-essential items. Diversifying investments. Diversification is key to weathering the effects of inflation on your investments. Here's how you can diversify your investment portfolio. Invest in different asset classes. Spread your investments across stocks, bonds, real estate, and commodities to minimize risk. Consider inflation-protected securities. Treasury inflation-protected securities, TIPS, are designed to keep pace with inflation, offering a way to safeguard your investments during CPI fluctuations. Explore international markets. Investing in foreign markets can provide exposure to different economic conditions and currencies, helping diversify your investment risk. Considering CPI in financial planning. Incorporating CPI into your financial planning can help you make informed decisions about your savings and investments. Here's how you can take CPI fluctuations into account. Review your retirement savings. Regularly review your retirement savings to ensure they are keeping up with inflation and adjust your contributions if necessary. Consult with a financial advisor. Seek advice from a financial advisor to develop a personalized financial plan that considers CPI fluctuations and aligns with your long-term goals. Stay informed. Keep yourself updated on CPI reports and economic indicators to anticipate inflationary trends and make proactive financial decisions. By implementing these tips for managing finances with CPI fluctuations, you can navigate economic uncertainties and protect your financial well-being against inflationary pressures. Finally, understanding how the Consumer Price Index, CPI, affects your money is crucial for making informed financial decisions. By keeping an eye on CPI fluctuations, you can anticipate changes in the cost of living and adjust your budget accordingly. This knowledge empowers you to protect your purchasing power and plan for a more secure financial future. Stay informed, stay proactive, and let the CPI guide you towards financial stability. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.